All right, guys, recap time. Best time of the day. So, Powell, what happened, right? Were you guys prepared for this? So, on my unique Fibonacci set, I have a carryover, 423.6 Fibonacci. That is the ending target. Need to remind you, for my last target that we had up there, or up here rather, it was also 423.6 before Catalyst. You remember this guy back here, this neon green 423.60, top of the market pick, okay? Then I had another Fibonacci where as long as we had held a specific gap up candle body Fibonacci, we were going to go to 439 and 6 cents. Let's take a peek at this. Right here, 423.6, high market, okay? So this Fibonacci played out extremely well. That was the top of the market. One other thing I will point out for free here on YouTube, and what my team uses as systems, moving average. Moving averages are always the best, in my opinion. Now, I use a very unique moving average system, a whole bunch to us. We developed this. So I have a very rare, interesting new moving average I've been testing. You see this light purple dashed line right here? And we're confirmational traders. And what confirmation means is if something breaks up and just starts running and running and running, you always keep it in the back of your mind that it had never back tested that confirmational support if something had broken over a level, right? That happens with moving averages as well. So for my team today, and before the data, way before the data, 11:30 in the afternoon, or pre-morning-ish, I guess, pre-afternoon in the morning. I said this right here in Discord. At 11:31 Central, I said 437.50, the 50% fib from my hidden system would be nice again. 437.92 obviously has to be resistance, and the 38.20 fib. And I'll explain those here. Maybe I won't. Nope, later on. I'm going to leave those out. And I said right here, and I tagged everybody so they knew here. I said something interesting is to note at 6/8/23, the 666 5-minute simple moving average, I'll give you that one, was a breakover, and it never had a live back test. We never had a back test of confirmation, right? So let's take a peek at that real quick on the chart. Way back here, that's what I'm referring to. And lo and behold, you have the white golden pocket day. So if you check out some of my recaps from 2 days ago, you're going to see me saying buy the golden pocket, 38.20 to the 50, and it's going to go up. Now, this up buy, this uptick, this up move, here's that light purple 666, okay? And for all the trade days coming in, right, since that breakup, we never had a live back test. If you're looking at right here, huge gap, not even close. And then further extension, okay? Now, coming into today's trade day after that prediction, and that's something that's really weird that stuck out with no back test on any FOMO force up after we hit our target of 438 or 423.6 fib, which is 438.96 for the top of the day. I thought it'd be a little interesting that if the data washed out, we would actually track down this 666, right? And that would be our final confirmation. And for 5 days up, just straight, no backtest confirmation, just riding that 200 up, that would be a tall tale sign. I was like, well, this would magnet to the downside. Now, I had a couple other calls here in chat and a couple of short terms here as far as the shorts go, but they all played out right here. So this bounce right here said short both of these, come down to the 200. We had some really nasty points right here. They're really good. Something to note, after this volume beat, this entire section had 0 buyers leading up into the release. Now, the release of Notes and Powell. Now, again, I'm more of a technical trader. I do love news psychology and the bias of where that puts us, but you know, it was supposed to follow up with a really hawkish Powell, and you know, he did the panda round. He just kind of beat around the bush. He was very, very neutral on everything, repeated a lot of the same things, and that left us with the same kind of mixed bag of what's going to happen next as we've had. So now price again, 2 more rate hikes continued on. That's fine, but when we talked about this FOMO rally leading up into Powell, we talked about this being a sell the news event finally, right? The rates are finally going to stop. We're going to stop hiking. We're going to cut. Like, those were all the speculations. Those were the bulls just going crazy. Even if the pause came true, which we had said coming into this meeting, we had like a 90% chance at the point that we were going to get the pause and the bulls were going to get the pause. Doesn't mean it's bullish. That just means that that pause, obviously, you zoom out, might have been priced in, give or take a little. You know what I mean? So when that came to light and you got the pause, which was 80-90% in the Fed fund rate, accessible to do so. Like he had to pause. He wasn't going to go against the narrative. And it all happened to be the questions after that. Well, that obvious, right? So we took some short positions here into the meeting and down. And this is what I told my team after the dump. Now I picked the absolute bottom right here. Let's go to the 1 minute chart. And utilize our intraday indicators here. Now, as soon as we started to see this, and this was pre-Powell, and I said, just watch for the dump. It's going to come back down, and we're going to have some interesting stuff to look forward to here, right? A lot of the times for Fibonacci, when we hit the extension target 423.60, our best case scenario is coming back down to the next Fibonacci level, the 2618, okay? That's right here at 433.44. You notice, look real close, we shied it, and that matters a lot. We never hit that, which means a live tag of this never existed. So the rejection from here, still prominent to come down to the 433.44. Now, pre-Powell came on. I said right here before he gets on, coming to 130, Powell has a really good opportunity to loop this thing up. When he comes stepping on the podium, starts chatting the questions, forces it up. And we've seen that a couple times last two meetings, right? And then potentially dumps back down, right? And what did we tell you in the last video? And I'll link the last video in the description. Look at the daily RSI and the macros here. Macro, hot, right? We're up in the RSI. Last time that had happened, you can scoot back. We don't get daily hots very often, okay? Or cools. We don't get any extremes over 70, under 30 on the relative strength index. Now, we don't have any carrier help here from TTM or MAC because the MAC's not slowing down, oscillation's not slowing down. So can this peg up for a little bit? Sure, that's fine. A couple days here, there, whatever, it doesn't matter. As you're building a short position into these highs, who knows? We could have one red day tomorrow, so on and so forth, but I know where my tops are going to be. Now, back to the point of being macro bearish for a pullback, not that we're not going to go to all-time highs or continue the uptrend. We're just up too far right now. It just needs a technical pullback. And a catalyst for that is going to be Powell. So when Powell stepped on, back to the minute real quick here, finish this, we had a lot of good divergences. Now the 1 minute MAC, I said, just watch the 1 minute. When something flushes so heavy, we're not going to have some good jam to use on the 5 minute, 15, 30, whatever you want to use past a minute, because the indicators need that much time to reset. Right. So when we're looking at these indicators in the 1 minute, they are moving much faster than obviously longer standing time frames, 5s, 30s, 15s. So the 1 minute is going to come into the most played area. Now, if you take a peek at this, right here is Powell Prion, right when we got that MAC cross. And this is where I said long to my team, squeeze up, and I was looking for 200 estimates. We knocked this one out of the park and ended with like a $3,900 day. And right here, that little bottom area, the MAC cross gave us a signal. TTM was on the backside, and the RSI started to stabilize inside the 30 range, which it wanted to go to a at least 50 move, right? And then higher, which it did, and then plunged, right? So everything worked out to the T off this bottom purchase. Now, to boot, we had, let's back this up, really good weekly over-unders to work with, right? And daily. So I'm going to go back to the default real fast here because the 1618 on PPI, something I want to mention real quick as well. So yesterday, CPI, there's PPI. This is one other thing about tagging that I needed to get out of the way here. Now, I mentioned shying a Fibonacci, like a price level, right? It gets really close to that level, it never tags. The systems know that. Now, the CPI back here, I fibbed out the high-low, the CPI in our default chart, so I was taking a peek at this, and this is how we longed the market off the dip and rip. Notice here, I'm just high-lowing the Fibonacci to the long side, CPI, and notice price action yesterday. Did it get to the completed 1618 extension? Nope, nope, nope. Okay, well, coming back into today, and this is what we said in the morning. I said there's probably going to be a little bit of a dip, panic out, reverse, so we can at least hit the 1618. Then it gave us a full-on extension way back up here, which lucky we were ready for on our other chart, 423.6 extension, and then turn back around. Now, but this early morning pop to the 1618, we had a pretty gnarly futures move on. That's where we hit most of our first big target. Because on the futures here, this was like 17 or something like that. Yep, 10, and then the next roll up, 14, 15, 16, 17. So those two last little pieces to the pie to that push, we predicted that, right? So just to remember, as we fell back down, I'll give you a big wild hint of where it fell down to. It's not going to be very hard, but once it completed its 1618 tag, data came out. Where did data bounce? Well, let's take a peek to our left. We know that 38.20 and 50 is usually that golden pocket. CPI, that is in between 433.60, 434. I think we went a smidge below that, but obviously in the panic and pressure of that move, let's take a quick peek. Yeah, just a smidge before that. But just to be mindful that CPI data played out. Here's the golden pocket, also associated with that long dip buy when Powell walked on the stage, and we said long everything when that MAC started to cross. done deal, right? Huge upside, nailed that. Now what's next, right? What's next? What's the prediction, right? That's what you're here for. We're going to get to prior tap. Now I have out fibbed right now the momentum move of the first couple 5-minute candles. I think it's 2, which was that huge drowned out move, okay? Double red. So what I did is I took it from the bottom to the top. And what I do with these is if the Fibonacci is inside the play range, and this is data, this is the release notes, right? We popped out of that data fib range a smidge. Here's the 0% right here. Obviously 100 right here. You're going to take it from here, draw up, right? Point of interest start, point of interest end. It's going to point to 1618 right down here, 431. Let me come back to that in a second. If we are inside this Fibonacci 0% zone, we are heading back down, okay? Might not be right away tomorrow. Might be a little bit digestion needed. Might chop around a little bit, whatever. I grabbed some puts today, slowly easing in because I know my risk management after hitting a 423.60 extension on a very important fib, and I have 78.60 weekly special Fibonacci right overhead with another super important long-term trend line to bump its head on. Even if it did reverse pop back up here, I'd short into those as well. And I would obviously put some time on it, right? Because if I go 2 months out on these puts, there's no way the market is going to stay hot for another 60 days in this market condition. 2021 after the pandemic and a fabricated money injection market where every single dip gets bought and it just says over hot on the daily all year. Sure. Yeah. Why not? But we're not printing money. This is a completely different scenario. I feel like a regular technical pullback will be there. So back to the fibs. Inside this double red range candle, we will be coming down inside this 100 fib. We are taking where that data was released, dumped it, had the huge Powell rip, and then they scammed everybody at the 4,400, right? And I'll get to that in the futures. Now, this Fibonacci is very important, right? This actually, if you notice, you might not have seen that here yet, but this was my prior, okay, target that we had just talked about. That's the 423.6 with the neon green, where the market dumped. Look where that 1618 comes in. Double Fibonacci level, okay? So when that comes in, this is going to walk itself down, potentially. 2 things need to happen. Under the 666, okay? This light purple, 5-minute, got to stay under, right? And we do have a very unique cross starting to set up. It might not happen tomorrow or into Friday, but this unique cross I'm not going to explain on stream has to happen. It is setting up. It might not be there yet. So if this happens to come down to the golden pocket, right here where the 61.8 is, and messes around a little bit and just does this jam, and topples and goes up a little bit more, well, so be it. That's fine. And then we will look for that next short range, and I'm just going to keep shorting tops as we come into that hot daily RSI. But if we have a cleaner move through, right, and we catch up with speed under the 6665, so it's going to do one of these, or the moving average is going to catch back up. Hopefully by the morning would be great. Get our little cross key. We are going to look for 2 targets, 50 weekly, 432.68 to the short side. Then after that, obviously the 1618. So we got to get under the Powell bottom, okay? This bottom right here, got to get under that to make the extension move to the 1618, okay? So with that being said, let's go to the futures. I want to show you guys this little scam at the end of the day, which was cool because psychological number 4,400 was very prevalent there. We're going to go into right here. Here's that dump. Here's all the data. We'll look at one more thing on the 3030. Now, 2 things for the futures now for overnight. That's not just SPY. This 3820 is the most important level we're looking at, 4411, okay? This is huge. Right now, we are coming into a higher low RSI. This is what it's scary about the short, where we're still marking really decent territory of shorts because a short fuel, short squeeze, scam, back up because we are still indicator heavy on letting stuff go to the upside. It's too slow. The indicators are not caught up yet. We are too oversold in this general area. Now, that pertains to this holding 4411. The futures hold that and starts to force its way up. We will see those weekly back tests of the 7 fib and above, so on and so forth. If we get under 4411 and start to trend, and again, these moving averages all split, we get under the 666 and move down, this is where that final move is going to happen. We'll target this out on the futures as well. First 2 candles of the data, 5-minute down right here. And well, I didn't want to show that to you guys, but whatever, it's fine. You get another freebie. Under the 3820, the hidden Fibonacci system has an intra or very close to. Anything under the halfway point here, under 666, we're going to go for 43, I think it's like 60 something. Yeah, 4364. That 4364, lo and behold, is the golden 50 Fibonacci, okay? Remember now, once we got over this, we didn't really have a mean backtest. It came all the way up to the 3820. Remember, this is the pocket. These are the golden pockets between 3820 and 50 and 618 and 50, okay? If we cannot maintain above the 3820 and continue the FOMO, the pocket will collapse back down to the 50 and then decide whatever it wants to do. That's what we're banking on for the short play. If we are above 4411, we will continue the scam squeeze because Powell was not hawkish, he was neutral. The market will digest this, and the Fed speaks to follow will be dovish, and that is what we are going to look for. We do have some data points coming up, and it's all going to be the Fed words following through and whatever they're paid to say. So we're going to see that coming through, and those are the only two levels. So watch your 4411 over under, 2 SPY levels we gave, and right now we are in dip buy territory and scam up territory still. Let's look at the 3030 to confirm that for the last piece of the puzzle here and see if we are right for tomorrow. Now, the only thing that's saving us and why we are looking for this downside, the 3030 was primed for a perfect re-squeeze back up when it closed, okay? We had an opportunity to get back over this 50-point. Oscillation was beaten higher, and we could have went over that 50 RSI to start the squeeze. Now, that was a few and far between. Obviously, we were buying puts, so we were looking for the moving average system to tell us. Now, not going to get into it too heavy, but whenever we break a 50, loop 100, we come back to the 50, roll it, break the 100, and find the next moving average in the system. So 200 SMA 3030 is also one of the 3 targets I want you guys to pay attention to, pending on how fast everything catches up. Those are all your targets. Keep short under here. Keep confirmation continuation 4411 over or under. Over or under. Does not matter to me. If it scams out and starts putting my puts in red, I don't care. We didn't go too heavy. We got a lot of time on them. So as we go into this area, 4477 would be the next watch. Okay. Now, what I would do here, I'm not going to show that on stream. Too many paid members paid too much for that math. So what I'm going to say here now is under yesterday's close here, under 4411, take her back down. Let it start washing the Powell. If it doesn't and it starts chopping the golden zones, which it already did once here, and comes back down and hits that 3820 or 61.8, wherever it's drawn, we start moving up. Great. It's going to be another short opportunity. If we fall back into that and we find ourselves down by the 100, bounces to a lower high, finally breaks through, gets it, we will get our target 4360. That is the 1618, and back to the golden Fibonacci 50 of the futures. Now, mind you, the last little bit of information I'll leave you here, the new contract gap up, we still have this sucker to fill. Okay? So be mindful of that. Might not be tomorrow, might be into next week, but that's still there. Okay? Look at this. Futures do not gap. Go to the daily and look for futures gaps. It's not the S&P 500. This is what causes gaps on the S&P 500. Okay? Futures don't gap. So, with this being so far extended, this is why we're grabbing puts here. I'm thinking topping here, and at the very best case scenario, 43.22. You heard it here first. All right, guys, stay tuned for the next. We'll catch you then.